I'll just say long term, the demand forecasts for uranium look pretty incredible if nuclear grows anywhere close to where it's projected to grow. So we currently have over 30 countries that have pledged to triple nuclear capacity globally by 2050. We have a very, very thin and fragile uranium market. So long term, we have this nuclear renaissance story that continues to improve. So there's a firm base for the price of uranium currently in basically the high 70s. The long-term price is in the low 80s. The upside price, the risk is to the upside, and there's no real target on where this price could go. The incentive price is arguably probably around $100 a pound, inflation adjusted from 60 or 75 years ago. China is growing like crazy. They're consuming uranium more than any other country by orders of magnitude. They're building up their inventories, and those inventories are not for sale. They have the largest commercial inventories in the world, pushing 600 million pounds of uranium.
Hello and welcome to the Achieving Alpha podcast. My name is Steven and I am the host of the show. Today, I'm delighted to be joined by Justin Huhn. He is the founder of Uranium Insider and he is a specialist in uranium and the nuclear investing. Welcome to the podcast, Justin. Really great to have you on. How are you?
I'm doing really well. Thank you so much for having me, Stephen. I appreciate it.
Real pleasure to have you on the show. Everything okay in California?
Everything's good. Yeah, it's good where I'm at. There's a wildfire raging through Malibu right now, but that's a little ways away from me. So besides that, everything's just fine.
You always need to be careful of those in California. All right, excellent. Well, today I thought it would be really good to have a very specific episode on uranium. As I mentioned before, we have touched upon uranium in a couple of podcasts, but we've never done a full podcast about uranium. So it's really great to have a specialist like you on this podcast to be able to talk about it in more detail. Just before we get started, as it's your first time on the podcast, if you could just give a little bit of a background about you and your career in investing and in uranium, as well as maybe a little bit about Uranium Insider as well and what you do there.
Sure. I've been investing for a bit over a decade at this point. I started off primarily doing technical and momentum-based trading. The nuclear and uranium thesis came to me in 2016, coincided actually precisely with the bottom of the commodity in December of 2016. And it was an entirely different and new way of investing, new to me. Primarily, I learned technical trading from somebody who didn't want to know anything about a company or a sector or any of the fundamental metrics. He wanted to trade the screen in an unemotional manner, uninfluenced by anything fundamental having to do with the company or the sector. And that's how I learned to trade. Then this thesis came to me where this is a sector that's absolutely hated. The charts looked absolutely terrible. And it was a growth story, a fundamental growth story. I realized I knew nothing about nuclear. I dove in head first. I was completely enthralled with the fact that I knew nothing about this sector, that it actually was and continues to be a growth industry. And it was a first big, real contrarian bet that I had made. And it's turned out pretty well so far. Honestly, it's crazy to say this, 7 years into it, but there's certain themes that are playing out right now that could be decades in the making. And we could actually be considerably early, considering small modular reactors, the AI, electricity demand, et cetera, et cetera. We can talk about all that more. But so I dove in headfirst in 2016, really started to understand the thesis in 2017, 2018, put some money to work around that time, and slowly built up Uranium Insider on Twitter at the time, just connecting with people in the industry and learning as much as I could about the industry and about the uranium sector. And that really organically turned into what became the Uranium Insider service, where we have a small team now. We focused entirely on this sector. We cover the physical uranium market and the fuel cycle, and also have a recommended list of securities. And we're 5 years into this now in terms of the Uranium Insider service. So it's been quite a run, but like I said, it's very, very interesting to feel like we've been following this and covering this for years, yet still there are elements to this story that could mean that we're quite early. It's hard to see exactly where an exit point will be for this thesis.
Yeah, that's really interesting. Is Could you please tell us your long-term bullish case for uranium, and maybe just touch upon a little bit where we are in the market right now, what the supply and demand dynamics are at the moment in uranium, and yeah, we could focus on the medium and long term because nobody knows what's going to happen in the short term.
That's absolutely true. Medium to long term. Well, first of all, I'll just say long term, the demand forecasts for uranium look pretty incredible. If nuclear grows anywhere close to where it's projected to grow, so we currently have over 30 countries that have pledged to triple nuclear capacity globally by 2050, and that sounds like it's a long ways away, and it's really not. It's 25 years, and this sector actually thinks in decades. And so nuclear utilities look out 5 to 10 years into the future for securing their fuel needs. You have nuclear reactors that can take 5 to 10 years to build. So 25 years from now, to triple global capacity is an enormous undertaking and a very, very lofty goal. So even if we get halfway to that goal, the demand picture for uranium is truly remarkable. And there's considering that, there's a concerning level of supply on the horizon, considering the growth level. And when I say concerning, I mean not enough. There's not enough supply currently. We currently are sitting at, let's say, about 150 to 155 million pounds mined this year out of the ground, and about 185 to 190 million pounds of demand from the global reactor fleet. The only reason that that can exist, that type of supply shortfall, is from inventories. And inventories have been drawn down. Commercial inventories, utility inventories are all on the low side, historically speaking. The above ground mobile inventory that was very, very large in the late 2000 teens, that Sprott, Cameco, and the utilities of the world have slowly consumed, is largely gone. We have a very, very thin and fragile uranium market. So, long term, we have this nuclear renaissance story that continues to improve, that's driven in large part now due to the expected electricity demand that is, it's already happening in the US and China and the UK and France and Japan. Even with declining population demographics, the projections are huge increases in electricity demand. That's driving the de-risking of the nuclear fleet and the accelerated nuclear builds, with almost 60 reactors under construction right now globally. That's the long term. The midterm is, we have this supply deficit. It's going to persist for years. Best case scenario on the supply side is multiple large projects get off the ground and can be producing uranium in the early 2030s. That's kind of the best case scenario, is maybe we see a marginally balanced market in 5 or 6 years. And that's if everything goes right on the supply side, which it never does. So the midterm is, utilities have to come back to the table and contract in relatively large volumes. There's hundreds of millions of pounds that need to be contracted in the next couple of years. And we have a thin and fragile supply side in this industry. So there's a firm base for the price of uranium currently, and basically the high 70s. The long-term price is in the low 80s. The upside price, the risk is to the upside, and there's no real target on where this price could go. The incentive price is arguably, probably around $100 a pound, inflation adjusted, from 60 or 75 years ago. So we're probably going to get there, I would argue, in the coming year. And where it goes beyond that is really going to be just driven by how badly the end users need the material and what they're willing to pay for it. We think we're going to see a situation in the next, let's say, 24 to 36 months where multiple buyers are going to be competing for minimal pounds available. And that's what we see coming. We see many very reliable and predictable drivers of a much higher uranium price playing out in the next few years.
Okay. And obviously, in uranium has suffered from what I like to call a PR problem over the years because of Fukushima, Chernobyl, and other such disasters that happened over time. Do you see that lifting a little bit, the reputational aspect lifting a little bit, as there's much more demand for electricity and people realize that it's extremely needed to use nuclear energy in this type of circumstance? Can you see that shifting?
Yeah, absolutely. It's shifted in a major way, especially in the last few years. I think that a lot of the reason it's shifted is due to the fact that the environmental left, let's say, of the political spectrum, that is typically much more concerned about carbon emissions and climate change, is finally recognizing that nuclear actually is a zero carbon or very, very low carbon source of electricity, right? So there's carbon embodied in the construction of the units, but the actual production of electricity has no emissions whatsoever, carbon or otherwise. So it's finally being embraced by the environmental left as a quote unquote potential solution for the carbon problem, let's call it. And that has shifted in a major way, and to the point where we have, even in Japan, the country that has suffered the most recent nuclear accident, is majority in favor of restarting reactors and in favor of building new nuclear. Same thing in the United States, in favor of nuclear. Same thing in Germany, that the population in Germany 10 years ago was 100%, 90% in favor of shutting down their reactor fleet. And that was largely in response to the Fukushima accident. Well, now that Germany has seen the results of shutting down their reactors, which has been a massive expansion of lignite coal power, which is the dirtiest power source on the planet, they've come to see much higher electricity prices, a much dirtier environment. And the German people, there's actual polls being done in Germany right now, they're majority in favor of restarting their reactors. So it's been a complete 180 in terms of sentiment around nuclear in the last 10 years, and especially in the last 2 or 3 years. It's very good to see.
Yes, no, it's really great to see that lifting. And obviously we're expecting some of the dirtier power supplies such as coal, etc., to reduce over the years as we start to look more at sustainable energy and other areas. How big can uranium actually get if we take into account like a market share, and if we compare that with solar energy and wind energy and other sustainable energy sources? How much of the pie can uranium actually take long term?
It's hard to say because electricity sources are going to grow probably across the board. And even though there's, climate goals primarily in the West that are aiming to reduce and eventually entirely phase out coal power, there's more coal power being utilized today than ever. So globally. So coal is probably going to continue to expand, oil and especially natural gas power going to expand. Solar is expanding a lot. Wind seems to be slowing down. There's been a number of large proposed wind projects that have been unable to secure financing to get them off the ground. So wind seems to be taking up a smaller and smaller percentage, let's say, of the overall grid compared to the growth rates of solar, of nuclear, of gas, and of coal. So it's probably going to be in all of the above. And even in that case, nuclear is going to grow a lot, even if it doesn't end up being a larger percentage of the overall electricity capacity globally. With that said, right now it's about 19%, almost 20% of the grid in the United States. It's 10 or 11% of the grid globally. So it's still a very vital, crucial, clean baseload source of energy here and abroad. And it's set to grow a lot. So right now there's, I believe, 57 reactors under construction currently. 30 of those are in China. China is growing electricity like crazy. They are shooting to go from around 2 terawatts of electricity to 8 terawatts of electricity in the next 10 to 15 years. The United States is hoping to go from 1 to 2, just to put that in perspective, how aggressively China is growing their electricity grid. And we're entering this situation where China and the US are sort of in this arms race to expand and grow AI and reach artificial general intelligence first. And that's kind of the goal between these two arch nemesis, I suppose you could say. And the implications for achieving that first are pretty incredible. So we think that's going to drive, primarily in the United States, a de-risking of the existing fleet. So the existing reactors are largely, if not entirely, going to be continuously life extended out to 80 and possibly even 100 years of a lifespan. And the average age of a reactor in the United States right now, I believe, is just under 50 years old. So we should have 40, 50 years of continued service from the bulk of the fleet in the US. But we actually think we're going to see growth of nuclear in the United States, and we're going to see new large reactor build announcements. I still believe that we're going to see that probably within the next 6 months or so. And then the global picture, every day we hear about another country considering nuclear, phasing out their anti-nuclear legislation, new construction hitting the ground, new deals being done for both large reactors and small modular reactors. So it really is kind of another nuclear renaissance, kind of like the 70s and the 80s.
Yeah. That does make a huge amount of sense what you said about China. Obviously, they've got an absolutely huge population with a growing intensity for power demand. So it makes sense that they will want to have as much uranium as possible. If we focus a little bit on the US now, obviously, we've just had an election, and Donald Trump and the Republicans pretty much swept the election. And I wanted to ask you a little bit about the differences you expect from legislation between kind of the Biden administration and the Trump administration when he comes in, and what you kind of expect from that US picture for uranium development.
Sure. Well, historically in the United States, the Republicans have been much more favorable towards nuclear energy than the Democrats, and that is something that has it hasn't shifted. But the Republicans still are very much in favor of nuclear. But in the last 5 or 6 years, Democrats have really come around and have been supportive of nuclear. So we've seen the Inflation Reduction Act, we've seen the Advance Act that was passed a couple months back that is putting funding towards advanced nuclear in the United States, and the legislation that banned the importation of Russian uranium. That particular legislation was percent. It was voted unanimously by both Democrats and Republicans. And so especially Biden's Department of Energy, has been enormously supportive of nuclear energy. So we're hoping to see a continuation and possibly even an improvement on that momentum here. And there's a number of signs that are pointing towards that likelihood. So one of those is that Trump has Elon Musk kind of as his right-hand man seemingly right now. Elon is very, very supportive of nuclear. He is operating multiple companies that have AI integrated. So X has Grok, Tesla has the self-driving software that's largely driven by AI. And then there's AI elements to SpaceX as well. He understands, in fact, he just built a data center in historic time and knows what is happening here in terms of the drive to achieve AGI, the competition, let's call it, with China and elsewhere to get there first, and the electricity growth, the electricity demand growth in the United States, the picture of that. He fully gets it. Trump fully gets it. So that's really, really important to understand. Trump also arguably is more than anyone pro-American energy sovereignty. And that is going to take an expansion of multiple forms of energy. And we think that's largely going to be nuclear and natural gas. Anecdotally, Trump reposted on his Truth Social platform last week an article that was written about 2 weeks ago claiming that Trump can achieve national energy security by doubling nuclear capacity in a decade or so, is the language in the article. So Trump's sharing of this article is a seeming endorsement of what the article is stating. That's very, very bullish for nuclear. Trump has nominated Christopher Wright as the Secretary of Energy. Christopher Wright is the CEO of Liberty Energy. They're a fracking company, but Christopher Wright is a highly, highly respected, pretty much across the board gentleman who is also supportive of nuclear. He sits on the board of an advanced nuclear company called Oklo, and this is going to be the Secretary of Energy under Trump's admin. So there's a number of elements that are leading towards us to believe that the Trump admin is going to be very supportive of nuclear. There's a couple of overhanging uncertainties, one of them being the Inflation Reduction Act. It's probably going to get chopped up and cut up and possibly re-legislated. The nuclear supportive elements of the IRA are largely benefiting Republican states. So we believe that those elements will remain into whatever Trump ends up doing. But that is this overhanging question for the industry in the United States. And that's one thing that's contributing to slower contracting demand for US utilities until they can figure out what's going to happen with the IRA, what's going to happen with Russian enrichment deliveries. So all of these, it's sort of a complex web, but Trump gets it. He knows that we're reliant on Russia, so he's unlikely to try to reverse that legislation. It would actually have to be legislated for the Russian ban to be reversed. He can't just do it with the swipe of a pen. But he understands the electricity growth. He's surrounded by pro-nuclear tech guys like not only Elon, but David Sachs. He's now nominated to be his AI and crypto czar. And David Sachs, of course, is the co-host of the All In podcast with Chamath, these tech multimillionaires, if not billionaires, and they're all supportive and all bullish on nuclear. So it looks good, but there's still a lot of questions about exactly what it's going to look like that hopefully there will be clarity on in the coming months.
Yeah. Yeah, I think there will be a lot more clarity, I think. And I think if the more clear the regulations are, the better. But as you said, Trump is he wants to have as much energy sovereignty as possible. So, yeah, it makes sense
Indeed.
for them to build those nuclear reactors. In addition to that, I wanted to, if we talk about Russia and how it relates to the US, obviously Russia is a massive provider of uranium at the moment. Russia and Kazakhstan are, in my understanding, are one of the largest uranium miners. And I wanted to ask you a little bit more about how the reliance on Russia and Kazakhstan can potentially impact the markets, and whether you expect over the long term for that to start to dilute out into other countries, because it's obviously quite dangerous. Obviously, was what's going on in Russia. It's quite dangerous to have that energy dependence coming from Russia.
Absolutely. And I think looking at the past couple of years, we can see that Russia is certainly willing to weaponize energy. I think the most interesting aspect of this whole story has to do with the amount of total global production of uranium that comes out of Kazakhstan. So Kazakhstan provides on a 100% basis almost half. It's about 40 to 45%. Let's see, they're going to produce about 60, maybe 65 million pounds this year out of 150, 155. So yeah, that's pushing about 40% of total production coming out of Kazakhstan. Now, Russia, yes, Russia is in the top 5 of uranium producers, but primarily that has to do with their assets, their joint venture assets in Kazakhstan. They don't have great uranium assets in Russia. And Russia actually needs uranium. They're actually, quote unquote, short uranium because they have a large amount of enrichment and conversion that is sold into the global marketplace. And they are the biggest nuclear exporters. So they're building reactors in Egypt, they're building reactors in Turkey, they're building reactors. I think it's close to 20 reactors currently under construction or somewhere in the pipeline of exports for Rosatom. So they need that fuel, they need that feedstock, the first step of the fuel cycle, which is uranium that they don't have a lot of. Like I said, their best assets are in Kazakhstan. So what we've seen, especially in the past few years, is both China and Russia consume more and more of the committed supply coming out of Kazakhstan. And that's through, for Russia, primarily a large joint venture project called the Budanovskoye 6 and 7 project. This is going to be one of Kazatomprom and one of their larger projects in the country. It's taken a lot longer to get off the ground, a lot more consumptive of sulfuric acid, but it's going to be a big asset and it's going to be very important for Russia. On the other hand, China, which also has multiple joint ventures with Kazatomprom, has been the biggest buyer in long-term contracts from Kazatomprom directly. So Chinese utilities, Chinese companies have established joint ventures over the last couple of decades with Kazatomprom to actually have an offtake of pounds coming out of the ground. But then Chinese nuclear utilities are also buying the material straight from Kazatomprom. They've been the biggest buyers in the global marketplace in the last 5 years by far. And more of the committed supply coming out of Kazakhstan is going to stay in China and Russia. And this should be a huge signal to the West. The United States, Canada, and Europe have all been extremely reliant not only on Kazakhstan's uranium supply, but on Russia's supply of conversion and enrichment. So this bifurcated world, it's hard to say how long this will persist, but these long-term contracts are locked. So the committed supply, the committed future supply coming out of Kazakhstan is largely going to China and Russia. And once it's secured in those long-term contracts, it's secured. So there's only X amount of capacity that can come out of one place at any given time. And you have projected production from all of these projects in Kazakhstan going out to 2035, let's say. And once that's purchased and bought up in these long term contracts, it's spoken for. So China is buying this material hand over fist out of Kazakhstan. Meanwhile, the US utilities are sitting around going, are we going to get that next shipment from Russia? And China's thinking, let's make sure we're good to go out to 2050. And that's how these two mindsets are utterly different. China is growing like crazy, their nuclear capacity. They're consuming uranium more than any other country by orders of magnitude. They're building up their inventories, and those inventories are not for sale. They have the largest commercial inventories in the world, pushing 600 million pounds of uranium. But that is largely state owned or owned by state owned utilities. That is a absolute necessary asset for national energy security and national security. So anybody thinking that China is going to be dumping inventory on the market, they haven't done that yet. We don't think that they ever will, because they need that material. China also has negligible domestic source of uranium, which is why they're such big buyers of not only projects and stakes in projects, but actual long-term contracts from producers as well.
Yeah. And on the uranium miners, obviously there's a lot of demand for uranium at the moment. And I'm assuming that it's a lot easier for them to get long-term contracting and at pretty good prices. Is that what's the state of play at the moment with the contracting prices and the state of uranium miners?
So the contracting cycle is very, very interesting. We have typically this industry has these very concentrated boom and bust cycles. And we go through, it happened in the 70s and happened in the 2000s. It's happening again right now, but it's not over. And what has always highlighted the core of that cycle has been replacement rate or greater volumes being contracted in the term market. So replacement rate would basically be what the burn up rate is currently, 185, 190 million pounds annually. And that's only going to continue to grow. Why? Nuclear capacity is growing, and there is so much demand for enrichment that the tails are growing. It's hard to explain. I don't want to get too deep into it, but the tails assay level determines how much uranium is necessary for the enrichment process. As that level rises, more uranium is needed. So next year, I would say probably getting close to 200 million. 2026, we're beyond 200 million pounds of annual demand. So you would expect to see at least that much in volume contracted in a single year. And we would expect to see that for multiple years in a restocking of the inventories that have been drawn down over the years. So what we're seeing right now in the long-term contracting market, I'll give you the latest example is NextGen announced some contracts that they signed last week. NextGen is the developer of the Arrow deposit. It's the largest undeveloped uranium deposit in the world. They've yet to put a shovel in the ground. They don't have permits for the project yet. It's looking like they'll get them. It is the biggest project that the whole, let's say, nuclear industry is expecting will eventually be producing, probably late decade at best. Most likely, we're looking at early 2030s for the uranium to come out of the ground. However, they signed a contract with multiple large US utilities for 5 million pounds, delivery from 2029 to 2033, $79 floors, $150 ceilings, $150 per pound ceilings escalated. So what that means is at the time of delivery, the utility will be paying the price in the market. So that's to say the spot price. Sometimes it's a multi-month average around the delivery time. Whatever that spot price is, reference to the market, is what the utility will pay for that delivered uranium. And the ceiling is there to protect from blowing out to the upside for the utility. So if uranium is $200 a pound, they pay $150. But to have $150 ceilings in a market where we're currently at $77 a pound spot, 82 long term, is an enormous signal for the industry of where both the buyers and the sellers are expecting the price to go. That's what we think is going to happen in the next few years.
Yeah. I think there's a lot of room for uranium prices to tick up over the coming years. Okay, and again on uranium miners, is there any uranium miners that you just want to bring to our attention? Some that you like, some that you think have good business prospects moving forward, and that you're generally bullish on, and maybe some of the reasons why.
Well, we generally don't discuss publicly our recommended companies because that's something that we provide with the newsletter service. But with that said, I would mention Cameco is the obvious one for all investors in this space to watch. Their quarterly conference calls are sort of industry events that everybody should be listening to every quarter for sure. I also think they have a really interesting business model here. They have a lagged effect in their realized profits, let's say, coming from delivered uranium. So they signed a number of contracts at lower prices, and now that the realized price is slowly playing catch up to the existing market price. And that's something that folks will look at the company and say, how can this company be trading at these valuations when their realized prices is in the 50s, and here we are at 80, 82, 83. But they also have a 49% ownership in Westinghouse. Westinghouse is the most established nuclear company in the world. They provide parts. They build reactors. They also own the Springfields conversion facility in the UK, which is highly likely to be restarted by the end of the decade. So it's not just a uranium mining company anymore. And they also have an ownership in Global Laser Enrichment, which at some point they will actually even have the enrichment capacity. So they'll have the uranium mining, they have conversion at Port Hope, and eventually at Springfields, GLE for enrichment, and then Westinghouse has fuel fabrication. So they'll own some element of every single step in the fuel cycle. And so they're more of a nuclear company, just a uranium miner. It's definitely one that I think everyone should keep their eyes on. It has outperformed in the last couple of years. Perhaps we're likely to see a rotation into the smaller and mid-cap uranium mining stocks, but this is one of those companies that I think has set themselves up very well for this quote unquote nuclear renaissance in the coming decades for sure.
Cameco is a very interesting company. And what I wanted to say as well is a lot of those uranium ETFs have Cameco as one of their leading holdings. How do you feel about people generally investing and getting exposure to uranium? Do you usually suggest that someone that maybe doesn't specialize in nuclear, do you usually recommend for people to look at ETFs or to individually study individual uranium stocks? What would be your advice?
If you don't want to do a lot of work in this sector and study individual companies, and I would argue that you either should buy a service like ours that does that work for you, or you should buy the ETFs. You can obviously have upside and downside leverage by owning individual companies because they have individual mining risk, individual company risk, and that's something that you should always take into account. And with concentration comes volatility. So owning a basket of miners, it will spread out that risk. And that's effectively what owning the ETF is, although the ETFs usually have less diversity and more concentration. For example, URNM, I believe Cameco is north of 20% of its holdings, right? So, but you can of course have some upside alpha if you play it right. We have returned in the last 5 years since inception north of 400% for our portfolio, and URA, including dividends, is about 250%. So we've almost doubled the ETF's return. And that's something that can happen if you choose the right companies. But if not, there's nothing wrong with just playing the ETFs. They're highly liquid. If you understand the thesis and you're bullish, you can play options on those ETFs. But the institutional money will go after the ETFs. The Sprott Physical Uranium Trust is the way to play it if you just want to be long the commodity. I honestly think that's probably a pretty good play here right now because we've had this long consolidation period for the spot price of uranium since March or April. We basically have a slow downward consolidation with a floor right at about 76, 77 a pound. I don't see much downside to that price in the spot market, considering that the term price is firm at 82, 83. And traders can arb that difference if the interest rates are right and the utility interest is there. So the Sprott Trust, especially when it trades at a steep discount, I think it's at a 3%, 4% discount right now, pretty small. But the downside is in the single digits in my estimation. The upside is it could double from here still potentially. So that's physical. Then you have the large caps: Cameco, NextGen, Paladin, Denison.
Okay, all right, that's some good food for thought. And in terms of the different uranium miners, if we compare that to, the Sprott uranium price, what's the correlation like between the uranium miners and the physical spot price?
That's a really good question. And that correlation changes and can sometimes change drastically. So, in the very first leg of this market, from December 2020 to November 2021, just about a year, the miners drastically outperformed the metal. Then we went through a multi-year consolidation, downward consolidation, relatively speaking, of the miners versus the metal. Even though the metal was rising, the miners generally have done well zooming out over a long period of time. There's periods where they underperform and outperform. So starting in September of this year, which was in the first week of September, was kind of a bottom for the sector and a bottom relative to the metal. The metal has actually dropped since September. We were $2-3 down since early September for the spot price of uranium. Term price is up a couple of dollars since then, but the uranium price in the spot market, which is what everybody watches because it's the only one that has any sort of transparency on a daily basis, is actually down a few dollars, and the stocks are up between 25 and 35% since early September. So we're in kind of another wave of outperformance. And if you actually chart, let's say URA or URNM against the spot price, there is an enormous upside potential to get back to levels that we've seen in the past on a relative basis. And even if that chart goes sideways, if we're right about the price going up, which I believe that we are, the miners trading perfectly in line with the spot price should do extremely well. But of course, you buy mining stocks for leverage. We've seen downside leverage over the past number of years, to speak generally, with a few fits and starts. That chart is just starting to recover. And that's what we'd like to see, of course, is some outperformance going forward. But we need the sector to grow. We need more liquidity and more money to come into the sector, into the ETFs. The ETFs continue to grow in size of outstanding shares. We're continue to see money come into the ETFs. We think the last shoe to drop to really bring more institutional interest is going to be a movement to the upside in the price, because the story is out there. The institutional money is somewhat in the story, but a lot of it is on the sideline saying, okay, we get it. We see the tech companies are supportive. We see that the nuclear energy sector is growing. When is the price going to move so that the most of the vehicles that we can actually buy that have leverage to that price will also go up? Once that price starts to move, we think we're going to see a big influx of money into the sector.
What about the risk proposition for the more junior miners? Obviously, they're probably a lot more dangerous and a lot more susceptible to price swings. Do you see a good outlook for some of the junior miners, although obviously come with a little bit more risk?
Yeah, there's always more risk with the small caps. This sector is so much influenced by flows, and flows especially into the ETFs, right? So if a company is small enough to not be held by any of the ETFs, then you're going to see a lot more dilution, just because these companies are largely exploration companies, and in order to do a meaningful, even small drill program is millions and millions of dollars. And so if it's a 10 or 20 million market cap company that's too small, it's not held by the ETF. So when the flows come in, it doesn't really move. That is entirely up to the drill bit, and funding those drill programs at low valuations is extremely dilutive and extremely painful to experience. So it's a tough game for the small cap explorer. There's a handful that I think could make a decent discovery during the bull market and re-rate, and that re-rating gets even more leverage if the company goes from like a 20 to a 50 million market cap, and then they get included in URNM, and then they get included in URA or URNJ, then URNM, then URA. All of these things are kind of stair steps in supportive elements to bring that market capitalization and the stock price up. But in order to get there, it's a tough game. Management has to be very smart. They have to either make wise, accretive deals with other companies that build the overall size of the company that can then pull them into the ETFs and get some growth, or they just have to get really, really lucky with the drill bit. So it's a tough game. I would absolutely not recommend going heavy into any one exploration stock. If you're going to play the explorers, it's probably wise to have a basket of 5 or 10 of them, just because that dilution is pretty brutal. URNJ is the junior miners uranium ETF from Sprott, and they own some smaller cap companies. So URNJ might be a way to have leverage to that without as much risk as the individual company risk.
Yeah. And some of those, I guess, can be acquisition targets as well, right? And get taken over by some of the larger miners, which could have some upside, but you don't want to build your whole thesis around something getting acquired. But yeah, as you said, you can always size them smaller if you want to play in those junior miners. Then I guess you just size them a lot smaller than you would the larger miners.
For sure. Yeah. Position sizing is very, very important. And if your investments are keeping you up at night, your positions are probably too large. And that's one thing I learned very early.
Totally agree with you. All right, excellent. All right, so Justin, how can people find out a little bit more about you and find out a little bit more about Uranium Insider if they want to get some information? And you can maybe just explain what services you provide at Uranium Insider as well.
Sure. Well, we can be found at uraniuminsider.com. The services we provide are a monthly in-depth newsletter. It's usually 40 plus pages. We go very in-depth into the macro fundamentals of the sector, and then we cover all of the companies that we have on our recommended list. We do a monthly members only webinar that's a 2 hour live event. We typically have a special guest join us on those webinars, and usually that's an exec from one of the companies we recommend or somebody that's in the industry. So we've had Grant Isaac from Cameco. We've had the guys from Segra, the guys from Sachem Cove, which are two of the major funds that are dedicated to the uranium space. And everyone, we've had uranium traders on. It's usually a very, very good event. And we do that once a month. I also do update videos. I do a few of those every month, and we communicate on a daily basis with a data sheet covering news stories and flows in the sector. So we also do a weekly watch list that analyzes the charts from the previous week and makes projections about the coming weeks. So we basically cover every element of this sector and take what is an enormous amount of complex information and try to distill it down into what is much more tangible and easy to understand for investors. And of course, we also have our recommended list of securities. Like I said, I think we're up about 415% since inception, which is about the past 5 years compared to URA, 250%, including URA's dividend. So we're proud of that track record. And that even includes kind of the consolidation that we've had in the past couple of years. We've had a good move last year, a decent move over the past few months. We're very, very optimistic going forward about 2025.
Great. And congratulations on your track record as well. It's very impressive. And for anyone that's interested in finding out more about uranium and finding out more about Uranium Insider, I will put the links in the description for this video and you can check them out. But I've really enjoyed the episode today, Justin. It's been really great to talk with you. And I think it gives everybody a bit of a taste of the uranium market. And then maybe sometime later in the future, we can go into more depth on a specific subject.
Indeed. Thank you so much for having me on, Steven. It's been a pleasure.